To the Oxen Group Nightly. My name is David Stout. I'm the CEO, President, and Founder of the Oxen Group. The Oxen Group is your source for financial analysis and investment ideas. Please check us out at theoxengroup.com. In today's Oxen Group Nightly, we'll be talking about our wrap-up of Friday's market. We'll also be looking at our position in BP, as well as a new position in Ruby Tuesday. Also, we'll be looking at some of our other current positions in Nexus, as we had a busy day in the market today. Our forecast for next week and what you can expect moving into the final week before earnings season, and our disclaimer will be at the end of the video. It was a good day in the market today. We had strong unemployment numbers come out, as well as non-farm payrolls, and they really helped lead the way higher today. A lot of people were, as we discussed in last night's video, we were talking about the unemployment numbers, how if they came in below estimates, we could see a pretty outstanding day in the market today. Didn't do quite as well as maybe some would expect, but did break a very interesting resistance level near 12,400, and we also saw auto sales that were pretty strong today. They were up quite heavily at the beginning of the month, and actually Ford passed GM this month for the most sales in a month since 1998. The reason for that most likely is because Ford's more smaller lineup now than GM, and they actually, some of the analysts talked about how a lot of the sales started to move towards smaller cars at the end of the month, as some people are seeing fears over those gasoline prices. This is a lot better for Ford as they have a smaller lineup, but it does hurt the margins for both companies since they make a lot more money on those SUVs and a larger cars. Okay, so I think the even bigger story though today was that oil finished over 108. Over the last few days, this is today, this is Thursday, Wednesday, Tuesday, Monday. Since Tuesday, we've seen this price go from 103 to 108 as the Libyan conflict continues and we move closer to the summer. But you know, the movement in the March, late March and early April is usually when we see the kind of summer impact on oil prices. So we are seeing that rise as well as the Libyan conflict. So the fact of the matter is really, I'm not sure if we're going to see this kind of decline anytime soon. I think 110 is going to be a huge resistance level. I really cannot see it moving over that unless there's a large development in the Libyan conflict. But I think you can expect that we'll be in this range of like 105 to 110 for quite some time. That's really going to weigh on equities, I think, moving forward. And that is why we looked at getting into some positions in energy today. So here's the market today. We rallied at the open. We had a little bit of a quick pullback. We were fearing a little of a pop and drop maybe. We talked about yesterday, but we got support there and moved up. And we got a lot of this resistance here as we moved above 12,400. And then late in the day, we saw a real nice sell-off. I actually think it's a healthy sell-off, and but we were able to fill that part of that gap, part of that dip again. So it was good to see us fill that dip, but I do think we saw this pretty heavy sell-off. I do think that may suggest that we might be looking at a little bit of a pullback next week. We'll talk about that a little bit later. So today we got into BP. We got in at the market open. And we were looking for the stock to bounce off the bottom of its current range. We got bullish sentiment from JP Morgan, as they said that the position was heavily undervalued, and really the company significantly underperformed the other energy stocks in the sector. And as oil prices continue to move up, it does give weight to this company. I do think at a certain level, though, oil prices, they're too high, and I do think it actually affects BP adversely because they're going to start to see a loss of demand for gasoline. But for now, I do think this is a very good trend for them. Yeah, so we got in at the open at 45.18. The stock, we were able to exit twice through the day for about a 1 and a 1.5% gain. But you can see that the stock hit this very severe resistance level here on its 20-day exponential moving average and bounced back down off that. But if oil prices continue higher next week, we definitely could see a break that 46 level and move above it. And we also another position we got in today was Ruby Tuesday. We like this position moving into Wednesday afternoon next week. The company will be reporting earnings, expected to hit a 0.31 EPS versus 0.28 EPS 1 year ago. What we really like about the company is 1 year ago they surprised EPS estimates by 40%, last quarter by 27%. After earnings last 1 year ago, the stock jumped up 8%, and then on the day after earnings, and then 5%. 1 year ago, 1 quarter ago, which is right here. You can see this jump right here, and then you also see a nice big movement into earnings. So we've gotten some movement out of the stock already moving into earnings, but still 3 days left at a key turning point right here at 13.20. The stock broke over for a little while, finished the day below it, but as we continue to move closer to those earnings, we're going to see this stock pop above that resistance line and break out, moving up towards about the 1360 area. Other current positions we had for the day, we exited Endeavor Silver. We had a short sale on that for a 2% gain this morning, from 982 to 962. We exited our last third of JA Solar at 693 for an overall gain of 3%. Dean Foods, we've been holding for since the beginning of the week and just never got anything out of it. And as the stock looked like it was about to drop off a cliff, we exited it for a 1% loss, and before it did drop off its cliff, as it broke its support line. And then we exited another half of GameStop, or last half of that, for a 3% gain. So tomorrow's forecast is actually for next week. The market's continuing to rally on great news of unemployment, but I think everyone is starting to wonder, can we go any higher really at this point? But the problem with that assumption, though, is that after next week we have earnings. And there's no one that doesn't want to be in the market right now as we move into earnings. I mean, we're looking at a continued rise in consumer spending, continued rise in business spending. There are going to be another round of probably pretty significantly good earnings. I've seen estimates out there that probably another 75% of companies will beat earnings again. So I don't think anybody's going to not want to be in stocks as we move into earnings season. So it's going to be an interesting week next week. My guess is we'll probably see maybe a pullback at the beginning of the week, but a sharp rally into the end of the week as we move into earnings season. And as we start to get some of those earnings numbers out there, that could be another reason to move even higher. That's going to wrap us up for today. Please visit www.oxengroup.com. Email us at contact@theoxengroup.com. Call us at 1-800-709-1160. Be a part of 70% plus accuracy.